Ladies and gentlemen, this is a very, very important video, okay? We did a YouTube community poll yesterday. On that community poll, I asked the question, do you think the bull run is finished for Bitcoin? Now, 76% of you disagree. They don't think the bull run is over. Most of you think the bull run will still continue from here. I agree with that. I'm macro bullish on Bitcoin. I don't think we're in a bear market yet. I still think we have more upside to see. But I think that upside and that bull market is going to be significantly different to prior bull markets. As the days go on, I am less and less convinced by traditional cycle theory on Bitcoin in this cycle. I think more and more evidence is stacking up that the cycle this time will be dramatically different from prior bull markets. Now, that's a very, very big thing and a very, very deep topic to get into, because everything we've ever seen on Bitcoin ever, literally every single nanosecond of price action, right? Since 2012, the first halving, has been encompassed in the larger cyclical theory for Bitcoin. It's built up a very, very major macro trend in the 4-year cycle. Now, the fact that we're seeing evidence starting to go against this is big. That's why we need to discuss it today. But before we get into it, guys, so lots to discuss today. Stick around. Before we get into it, we need to look at the VIP group on Telegram just for 20 seconds here. VIP group on Telegram, we do altcoin trading signals 4 to 5 times a week. We've got a 77.51% win rate over 18 months of trading results. So that's very good results there on VIP. You can also get access to a group chat. We can discuss the market 24/7. Check that out if you're interested in trading plans. Let's get into the content here today. So just to start off, guys, I'm very macro bullish on Bitcoin. This pink 13-year support line currently sits at 57K. It's currently sitting at 57K with other indicators such as the bull market support band, such as the Pi cycle center lines in green and blue on the screen right now. These are all very, very normal levels to retest during a regular bull market. They're exactly what we're doing right now. I see no reason at this point in time to believe we're in a bear market. I'm not macro bearish at this point at all. If we lose 57K, we can start to discuss that question again. But as of right now, Bitcoin and crypto as a whole is in a pretty good position. So don't take anything I say in this video as being macro bearish. I don't know how you do that, but sometimes people get a little bit confused. With that said, let's discuss the actual larger macro picture, okay? So not talking about the current price action. We're talking about, where is the top going to be? How is the top going to look? How is the cycles in the future going to look? Are there going to be cycles in the future? These are the big questions. Because as I said in the introduction, everything we have ever seen, ever in Bitcoin since 2012, has been encompassed within this chart right here. That is the 4-year cycle date range trend. Within this date range trend, there are many other micro trends, okay? The writing on the top left-hand side of the screen is kind of relative to every single date range measurement here. They're color-coded, so you can go pause the video and look at the date range measurements and validate them. All of this charting points to the Bitcoin top being in October 2025, in October next year. That's when the bull market top should be as per the 4-year cycle. Now, here's the issue, right? That's a long way away. And we have seen short-term preliminary deviations, okay? So if we're going off 4-year cycle, the top should be October 2025. If it's earlier or later, the 4-year cycle breaks, the entire cyclical structure as we know it breaks, and we're in the dark for Bitcoin. We don't have regular cycles anymore. If this chart breaks, we do not see regular price action. We do not see regular, 1-year bull market, 1-year bear market, 2 years consolidation, the halving, and then it goes up again, and then there's altcoin season. Everything you know about Bitcoin, right, in terms of how it moves, will be gone out the window, will be in no man's land if this chart breaks. If the top is not in October 2025, that's it. It's over, right? I'm not saying Bitcoin's going to zero. In fact, it could actually outperform what it would usually do under the 4-year cycle. I'm just saying that the predictability, the macro predictability is gone. We're in a completely new market environment, okay? That has to happen eventually. The question is, will it happen this time? Well, I would say that out of any given cycle here, if I had to say, will it happen this time? I would say it's more likely to happen this time than it was in the last times. I'll tell you exactly why. We've seen, as I said, preliminary deviations from the cyclical trends. For example, we had a developing trend saying it takes 1,100 days for Bitcoin to break all-time highs from the last all-time high. Now, that was 1,100 days here. It was also 1,100 days in this cycle here. But this time, in this cycle, it's only taken 850 days, meaning we've moved about 250 days ahead of schedule. On top of that, we've broken all-time highs before the halving. We've never done that before. On top of that, we also saw a deviation in the sense that we never saw a regular pre-halving correction. Now, you might be thinking, what is a regular pre-halving correction? Why does that matter? What does that have to do with the top? Well, I'll tell you why. we have a trend here that's developed on the monthly chart on Bitcoin. And I've looked at it before, I'm looking at it again today. It has these yellow lines that kind of divide the bull market from the bear market, okay? It's kind of like this is the bear market region, this is the bull market region. The yellow lines are formed each time. They're not arbitrary, they're validated, and I'll tell you how in a second. If you bring up the monthly chart RSI at 67, the level at 67 on the monthly chart RSI in yellow, it validates these price lines as where they are. And the reason, the way it does that is that as you can see, every time we reject from the monthly chart line, we're also rejecting from the price line. This has happened on 3 separate occasions in Bitcoin's price history, meaning that the monthly chart line in yellow is relative to these price resistance lines in yellow on the price chart. So historically, we've always tested that monthly chart line and the price line and then rejected for a pre-halving correction before entering a parabolic bull market. That has been the trend that Bitcoin's seen, okay? Now this time we came upwards and we tested that price line at 49K. We also tested the RSI line, but instead of rejecting and seeing a pre-halving correction, there was so much euphoria in the market. There was so much green in the market already, even at that point, okay? Before the halving, due to ETFs, that we just pushed through. We didn't see a correction. There was no regular correction there. Therefore, what do we have? We have a situation in which Bitcoin did not see a regular pre-halving correction, broke all-time highs before the halving. It's about 250 days earlier ahead of schedule. We were only meant to, according to the 4-year cycle and developing trends within it, we were only meant to break all-time highs around October to November this year, right? Maybe September if you're pushing it. But instead, we broke all-time highs in like March or February, right? Late February. So you can see we've I think it was March actually. You can see actually it was late February, sorry. We've moved a little bit faster than expected. Now, these might seem small things, and yes, they don't invalidate the 4-year cycle. They don't necessarily invalidate the cyclical theory, because ultimately the 4-year cycle is based on pure tops and bottoms of bull markets and bear markets. So yes, this trend is still valid at this point, but the fact that we've seen dents in the armor of the 4-year cycle, dents in the armor of the regular cyclical price action means that there is a growing chance that the regular cyclical price action could break this time, which could throw us into a dark place, could throw us into a situation which we don't know what's going to happen next. Now, here's the problem. We don't know if the 4-year cycle is broken until after we see a clear top before the October 2025 date. So we don't really know. It's kind of difficult to navigate this situation, because if the 4-year cycle is broken right now, which could be the case, we don't know it yet. We can't know it yet. There's no way to know it yet. We just have to guess, right? And that's why I'm saying to you over and over again, do not rely on the 4-year cycle this cycle like you did in the last cycle. Like in the last cycle, if you're here on my YouTube channel, I was saying, oh guys, don't worry about anything. Just look at the 4-year cycle. It's perfectly valid. And it was perfectly valid, and it led to a bull market top. I was saying the same thing in a bear market. I was saying, don't worry about all of this. We're going to bottom out as per 4-year cycle. And we did bottom out as per 4-year cycle. But this time I'm not using that method, because we're seeing deviations from it. We have to consider other trends. Now, what are the other trends? Well, there are a few, okay? There are a few. We're going to get into something very, very interesting in a second. It's interest rates, but let's start with the other trends. What are, where could the top be if it's not 4-year cycle? Well, first and foremost, if it's not 4-year cycle, right? Asking where the top will be if it's not 4-year cycle is kind of a weird question, because it wouldn't really be a regular bull market top. It might just be a short-term top, or it might just be a significant top. And, we wouldn't really see a regular bear market. You have to get rid of all these concepts. If we don't see a regular 4-year cycle top, get rid of these concepts in your brain, right? Say, for example, we top out in September this year or October this year, right? Don't expect a regular 1-year bear market, because the 4-year cycle's gone now. And a regular 1-year bear market is part of the 4-year cycle. So perhaps you need to look more at traditional markets. Okay, that's what we're going to do in a second. But what I will say is this, we have developing trends on Bitcoin that do show us other ways of identifying where the top will be. For example, we have a trend with the 67 level. Now, we actually broke the 67 level over here. It took basically to the top around, let me get up a different chart just so I can show you here. 1 second, let me get to the Kraken chart, or actually we'll go to the index and get a bit more price action. Delete all this stuff on the screen here. and we'll bring up this 67 line once again. As you can see, there it is, right? So we can look at the distance of how long it's taken to break 67 to get to a Bitcoin high. It took 395 days in 2013. It took around 360 days in 2017. It took around 330 days in 2021. And therefore, we've got a situation where it's decreasing by around 30 days each time. Therefore, this time it might take roughly 300 days, okay? That would bring us to around November this year. There's other ways we can do it. We've looked at other ways before. Some methods take us to around March next year. For example, Bitcoin dominance. We look at Bitcoin dominance and we see, okay, well, how long have Bitcoin dominance altcoin seasons last? How long have altcoin seasons last, right? And this is important because generally speaking, when the altcoin season tops, right, that's when the market tops. So altcoin seasons historically have lasted about 300 days, okay, in both occurrences. Now, if we're going to see a 300-day altcoin season again, that would take us, say, for example, the top is in on altcoins or top is in on Bitcoin dominance, that would take us to around February 2025. So we can look at different methods, and the reason why I'm brushing through them is because I don't think any of them are particularly convincing. I'm just making a point here. Fact of the matter is, there are other ways to identify when the top could be, but again, there's a key word, could be. But they're very difficult to validate. And if we actually reach these points, if we actually reach, 300 days from the time we broke above this yellow line on the monthly chart RSI, are we going to sell just based off that one chart? Not really, right? We're going to have to wait for validation of it. So point is, it's going to be very, very difficult to navigate what the top will look like if it's not a regular 4-year cycle top, because we don't even know what happens after that. What happens after the top? Do we see a regular bear market? Or do we just go downwards for a few weeks or a few months? Or years? What do? We don't know. We simply, there's no answers here. I can't give you the answers. So, the point is, everything is resting on the 4-year cycle. And unfortunately, we're seeing dents in the armor of the 4-year cycle. This does not mean the bull market's over, not at all. The bull market right now is intact. Everything on a macro TA scale is intact. There's no evidence at all that we're in a bear market. There's no evidence at all that, this bull market is ruined at this point in time. That evidence could come through, but it's certainly not here now. So we're in a bull market, but we don't know when the top's going to be. And the number one method that we usually had to identify when the top was going to be is a lot weaker than it was last time. So what do we do here? Well, we can look at another way to find the top, right? If Bitcoin is going to unchain itself from cyclical theory, it might actually chain itself to traditional markets a bit more. That might be what's occurring this time. So let's look into traditional markets here, and I think we'll find a few more answers. Before we do that, though, let's check out the Bingx and Bitget exchanges. Bingx is global non-KYC. Bitget is global KYC minus the USA. They're both very, very low in trading fees. They've both never been hacked before. They both have protection funds in case they are hacked, right? So these are very important points here. And with my referral link down below, you'll get an additional 15% off of trading fees for life. You can literally save thousands of dollars with my referral link. And you'll also get access to a exclusive Wolves of Crypto reward center where you can get access to trading rewards for doing various challenges, etc., equivalent of up to thousands of US dollars. So check out my links down below. Check out these exchanges. Guys, let's jump back into the content. Right. Here's where we get a segment that's a little bit difficult for me to explain and navigate, but I'm going to try my best to do it. In orange on the screen, you will see the interest rates. In blue on the screen, you'll see the S&P 500, okay? What have we historically seen with the S&P 500 interest rates? Okay, here's what we've seen. When interest rates are pivoting, that leads to a reversal in the market conditions. That has been the norm. When interest rates are pivoting, that has led to a reversal in the market conditions. That has been the norm over time. It hasn't happened every single time, no, but it's happened, for example, in the dot-com crash and also in the global financial crisis. It's a bit jittery when it comes back to these periods of time. Interest rates worked very differently back then. They went much higher back then. They were much more sporadic back then. But ever since interest rates have been stationary or more stationary, more stagnant, that's how it's worked, okay? We also see a scenario in which, generally speaking, when interest rates are decreasing, that is when the S&P 500 finds its bottom. So, for example, global financial crisis, the S&P 500 finds its bottom when interest rates are decreasing. So we see bear markets when interest rates are decreasing, okay? That's the norm. Bear markets when interest rates are decreasing, and pivots in the market when interest rates are pivoting. Now, we are in a little bit of a different market environment this time because we have seen, for the first time ever, the Federal Reserve raising interest rates while there was an active bear market. That's the first time it's ever occurred. Never happened before. Right, so there is a bit of a different market environment. It is a bit harder to navigate. It is a situation which we don't really know exactly what's going to happen. But if we are going to go off these historical trends, right, forget about what happens when when interest rates go up and down. What's always remained a pretty true thing. I say pretty true because it's not completely true, but it's pretty true. Even back here it was, is that when interest rates pivot, right, when the Federal Reserve decides to increase or decrease interest rates for the first time, that generally leads to a pivot in the market environment, okay? Now, the market environment right now is bullish. Everything's going upwards. S&P's at all-time highs. Bitcoin's at all-time highs. We are expecting the first rate decrease this year. Currently in September, it's been pushed back a little bit, so it could get pushed back again. It could get pushed back for November, December, maybe even January next year. We don't know yet. But if we're going off the historical trend that when we see a pivot in interest rates, it leads to a pivot in the market, we can expect, actually, when interest rates start to decrease, that could lead to a downturn in Bitcoin and a bear market on Bitcoin. That is if the 4-year cycle is broken. Now, if the 4-year cycle is not broken, perhaps the 4-year cycle outmatches interest rates like it has done in the past, okay? But the fact of the matter is the 4-year cycle could very well be broken, and that means we could very well have to pay much more attention to traditional markets and what's going on with interest rates. Personally, I think it's in the favor of Bitcoin and in the interests of us as investors trying to make money on Bitcoin and crypto for the Federal Reserve to kick back rate declines for as long as possible. I would love to see rates stagnate at this level for as long as possible, because it's very important to note that the S&P 500 and markets in general act on what the future could be, not what the present currently is, okay? So they're anticipating the future. Now, what you'll notice is that in recent months, whenever we've seen a delay in interest rates, it's led to a downturn in the market. Whenever we've seen interest rates come a bit closer, it's led to an upturn. People are buying in anticipation for rates decreasing. When rates actually decrease, it's been historically a sell and use event. It's historically led to downturns, okay? You look at global financial crisis, downturn. You look at dot-com bubble, downturn, okay? Obviously, there's other factors involved. Obviously, they're very important other factors, even during COVID, downturn, right? Obviously, it's the chicken or the egg scenario as well. But the point is, generally speaking, on these charts, when interest rates have been decreasing, it's generally been bad for the markets. But leading up to those decreases, in anticipation for the decreases, it's been very good for the markets, especially at the pivot point when they're flatlining. That's led to the highest amount of gains. So I think, as I said, the best thing the markets can do is remain at this level with interest rates. And when interest rates start to decrease, that generally has led to a pivot in the markets, which has generally been, in this case, it will be most likely a sell signal, or let's say an alleged sell signal that you have to wait for validation for. Obviously, you wait for validation for everything. You don't just sell because of any one thing. You actually wait for the key breakdowns. That's where the Bitcoin charts come in, right? You need to be seeing the key breakdowns from the key levels. But right now, I'm a little bit skeptical. I'm not really sure what's going to happen with the 4-year cycle. I would be quite surprised, to be honest with you, if it played out perfectly this time. I think this might be the time, this cycle where the 4-year cycle breaks. Now, I don't really have, I suppose I do have evidence. I've been talking about it the whole video, but it's not validated yet. And so since it's not validated, it is a bit of a situation where the trend is your friend until it ends. But I also know that I'm seeing trends ending left and right here. So it's a very difficult situation to navigate as an analyst, even as someone who does this full time. I think this could very well be the cycle where the 4-year cycle breaks, or at least this is the cycle where there's the most evidence that it could break. And therefore, as I've said, it brings me back to my main point. We need to be reacting much more than we predict this cycle. I don't know where the top's going to be this cycle, okay? The most evidence still points to October 2025. But I've just gone through a whole video explaining why that's a little bit less likely this time. We've got all these trends. We've got this trend right here, which said late this year. We've got this trend right here on Bitcoin dominance, which said early next year. We've got S&P 500 saying it could be as early as September, October. Which one do we trust? We don't know. These aren't strong trends. They're all weak trends. So the point of the matter is, without the 4-year cycle, we don't know anything really. We just have to go off raw TA. Now, that's fine for someone like me, but for a lot of people, that's very bad. And even for someone like me, though, it makes it harder because, back in the day, back in the last cycle, in 2021, we could go off raw TA and also off of cyclical TA. So if the raw TA started to look bad near a time in which we were meant to be topping, that's supporting the raw TA. It's like, well, this looks extra bad now, I'm going to get out. But now it's just like, oh, well, we only have one metric to do analysis from, the raw TA metric, which sometimes is very misleading. So I don't know, guys. I think this is going to be a hard cycle to navigate. And again, I'll bring it back to my main conclusion. It's going to be a more reactive cycle rather than a predictive cycle. It's going to be a cycle in which we're going to have to trust the raw TA a lot more. We're going to have to trust these macro support levels. We're going to have to trust, okay, maybe if we break down from this level at, at 57K, maybe that is a sell signal. Or we're going to have to trust, maybe if the Fed starts to decrease rates and we do see downturns in the market due to that, maybe that is a sell signal. Get out, But again, we're going to have to react. As I said, we're in a different period of time, a different market environment on the S&P 500 as well, and interest rates. We've never seen the Federal Reserve raising interest rates while the market is decreasing either. These are all new things, and we don't really know exactly anything. We're kind of in the dark in this cycle. Again, reactions are going to be at the forefront, and raw TA is going to be at the forefront as well, which is why I recommend you subscribe to this YouTube channel, because that's what we do here every single day. So guys, I understand it's frustrating. I understand it's frustrating when, YouTubers don't have the answers either. And it's frustrating when Bitcoin's going sideways for so long while allegedly still in a bull market. This is all frustrating stuff, but this is just the environment we're in here. I do think that there is a growing probability that everything, I mean that literally everything, is quite literally changing. So we'll just have to play it by ear and let's see. Again, nothing at this point is invalidated, but the evidence is growing. So interesting cycle. It's going to be very interesting to pay attention to. I'm going to be paying attention very closely and keeping you as updated as best I can. Thank you so much for watching. I hope you enjoyed, guys. Again, check out the VIP group on Telegram for altcoin trading signals. Check out Bitget and Bingx for exchanges. And then finally, check out the Crypto Academy's Become a Trader 10-unit course. If you want to learn how to trade, that's where you can do it. We're teaching people how to trade in there in a university-style format. It's all offline. You can access it. Well, you need internet, but you can access it on your own time, in your own measures, in your own ways. 30 hours of content roughly. Check it out if you're interested. Thanks for watching, guys. Hope you enjoyed. I'll catch you in the next one. Cheers.